So if you bought European equities because of the improving earnings picture, because we're going to see a fiscal union, strong growth in Germany and France, what part do you rethink as the political world in Germany unravels?
I mean, when you buy Europe, you're buying 17 parliaments. So we kind of know that going in. I mean, buying the U.S., you have to buy the U.S. government. But for us, the three things that really have lined up that we continue to think into next year, the first is the fundamental story. This is the best fundamental growth story that we've seen since 2007, in our opinion. So the coordinated global growth theme, and we've seen that all year. The second is the valuation. So the U.S. has run since the bottom by about 280%. Everything else about, 120%. So we have an incredible amount of underperformance everywhere else versus the U.S. And then the third, and I think that's really important, is the technical. You have major underweights in those parts of the world, and people want to get involved. There's so much cash on the sideline. The earnings story is good, and then the dollar, right? The dollar is the last piece. If you don't think the dollar is going to run, that's a really nice investment for a U.S. investor investing abroad versus what we've seen in other years.
But if the political situation in Germany continues to unravel, are you set up for an asymmetric risk to the downside?
Yeah, so there's an interesting way to play some of these markets. If you buy a call, okay, you're long the market. However, if something unravels and the index goes down by 20%, you're not going one for one with the index. The asymmetric return on the downside, you're only risking your premium. And Alex, really important, volatility is really cheap. Despite all the headlines that we're seeing, volatility is still very cheap. So buying that downside risk protection, I think, is really smart right now.
So, Kathy, if Phil is right, that people really haven't come into Europe the way they should have, why not? We've been talking about Europe as being the place to invest for months now. So what's keeping them out? There must be something that's giving them hesitation.
Well, I think that there's a general feeling amongst a lot of investors, particularly on the retail side, that everything's just expensive, and they're worried about all the extraneous political things going on. And also, we're actually fairly positive on the dollar. So, we think that not that it's going to run back to new highs, but that it has a little bit more upside here as monetary policy tightens here.